We're in 2025, and one might ask what trucking insurance companies I should be considering if shopping for renewal or starting my trucking business. There's some new entrants in the market. There's some existing players that have been writing trucking insurance for decades. And the first one that comes to mind would be Progressive. Progressive is the largest by volume by far, and they will insure anybody, a new venture, somebody who doesn't have a 2 year CDL experience, or even experienced fleets. And what Progressive is very good at is the owner operators. If you're a single unit, just one truck, you're the owner, you're the driver, and you have a couple of years experience and your authority has been active for a few years, Progressive surprisingly can be very, very competitive. We've seen some of their rates in 6,000, 8,000, 10,000 per truck per year. Again, the ones that are more local, we'll see those in the 7,000 range. And but again, they have to be clean operations, the clean MVRs, safety scores, no issues, no claims, no losses for the past 3 years. I know, there's been some negative pushback from some brokers, especially if you're running a flatbed, because Progressive's cargo claim processing has got some, some negative connotations because they've been very, they've been pushing back against the brokers. For example, the load gets damaged, only part portion of the load is damaged, and Progressive saying we're going to pay $20,000, and the broker and the shipper is asking for a $100,000 payout because they don't care that only part of the load got damaged. So because of that, some of you are seeing that the load boards, they are not, they'll even say up front that don't come with Progressive. We will not accept Progressive. And again, it's more because of their claims practices. Overall, Progressive is still financially very stable insurance company, A-rated, no issues with them. But again, some pushback on claims, especially for flatbeds. And the way the market is, brokers can be picky and choosy. They don't have to, because they have truckers lined up and asking to deliver those loads. So, they might lose couple potential carriers to deliver that load with Progressive policy, but they'll find others that have other insurance policies. The other insurance company to consider would be Great West Casualty, 65 years in business, one of the top tier premier trucking insurance companies, easy to work with. They offer direct bill. You can, work with the agent or reach out to their customer service 1-800 number. They do require 2 year CDL experience, so it's kind of cut off for many inexperienced or the ones that are just getting into a business. Great West will write new venture, but then again, that new venture, the driver has to have a 2 year CDL experience. And if it's a new venture, they will limit your growth for the first couple of years. So basically, first 12 months, you will not be able to add any owner operators or company drivers. And year 2, they might allow you to add one truck. And it's only after 2 years in business, you will be able to grow with Great West. But overall, their rates were very competitive. I haven't seen a single broker that would be rejecting Great West. Everybody accepts them. Everybody loves them. Claims processing is fast and smooth. They usually take care of their clients. They also have what is called a single deductible, which is, kind of one of the benefits to be insured with Great West. So if you have a big claim where the truck, the trailer, the cargo gets damaged, and the deductibles, for example, is $2,500 on each. So $2,500 for the truck physical damage, $2,500 for trailer physical damage, and cargo, $2,500. So instead of paying, which most other insurance companies, yes, you'll have to pay all 3 deductibles for truck, trailer, and cargo, and it'll come to $7,500. So with Great West, you'll just pay whatever that highest deductible is. So in that case would be $2,500. And in addition, their policies have roadside assistance. They call it Choice Plus coverage. That includes towing reimbursement up to $5,000. Emergency expenses, all that is included. Price-wise, very competitive. If you qualify with them, you're seeing 10,000, 12,000 per truck per year, just depending on the values of the truck. And yeah, Great West is a rated insurance company. Another one that's been kind of like coming up lately quite a bit is Canal Insurance. A-rated. Canal will, they do require 2 years in business. 2 years CDL experience. They will write a new venture, but similar to Great West, you have to have a 2-year CDL experience. They will monitor your growth, similar to Great West. Price-wise, they can be very competitive. In some cases, we've seen where Progressive strikes out, Great West strikes out, but then Canal comes with very competitive pricing. They have special programs what they call test drive. If you qualify for this program, which is kind of unique, they will connect your ELD to their portal, and the liability premium portion you will be paying based on the miles driven. So they'll give you, whatever the rate per mile is. And it can be a very advantageous program if you do not, because they'll do like an estimate when they bind the coverage, but then when you start operating, it's literally that liability premium portion will fluctuate month to month depending on how many miles you drive that month. And in the cases where maybe they kind of overestimated your premium at the beginning, then you might get a pleasant surprise where those monthly premiums are lower. Just keep in mind with that program, the physical damage and trailer interchange and cargo premium portion, that's fixed, so that will not change. But for the liability, it'll depend on the month, and it'll depend how many miles you drive that month. Another insurance company that comes into mind that we usually see quite a bit is Berkshire Hathaway. They are similar to Progressive. They're all over 48 states. They will insure new ventures. Don't have to have a 2-year CDL experience. Anybody can qualify, but they can be quite pricey. They are A++ rated. Berkshire Hathaway is one of the Berkshire conglomerate's affiliates, sister company to Geico. And they can be, in some cases, in some states, we've seen in like Georgia, North Carolina, Tennessee, sometimes they can get very competitive on established trucking companies if you're 2-3 years in business, and especially if you had some violations, if you had some claims, claims losses, history losses, they would, they can beat out the competition. In their prices like $12,000 to $15,000 per truck per year. Although we have a couple North Carolina accounts, I think Berkshire Hathaway is around 11,000, 12,000 per year per truck. So it really depends. And as far as the coverages, broad coverages, everything from liability, trailer interchange, intermodal, UIIA endorsement, all that is available. And just to take a step back, so intermodal UIIA is available with Canal, is available with Berkshire Hathaway, Great West. The only one that does not offer UIIA is Progressive. And the last insurance company that I want to touch upon is CoverWhale. So technically they're not the insurance, they're not the actual insurer. They would be similar to like MGA, managing general agent, and depending on the state, they will just pull different insurance and represent different insurance companies. Although again, they market as CoverWhale, and in some states they write policies with Everspan Insurance. In some states it's under Knight Specialty or Ascot Specialty. They are competing directly with Progressive, Berkshire, Canal. I've seen their premiums can get, and again, in some cases, sometimes you just kind of like, oh wow, this one's like super competitive. I've seen them even outbid Great West in certain states, certain cases. Cover Whale requires 2-year CDL experience. So again, not everybody qualifies. I mean, if it's a box truck, then yes, you didn't have to have a CDL. But other than that, they will write a new venture. But the driver has to have a 2-year CDL experience. And as far as the violations, loss runs, the safety reports, all that is kind of like similar across the board for different insurance companies. But then again, depending on their own experience in that particular state, sometimes we might get a quote that's canals better in Georgia, but then that same risk with same parameters, if it's in Tennessee, they would probably get a better quote with Great West or even Cover Whale. So it is case by case. Cover Whale, they do not limit growth. They also offer UIIA, so you can have as many trucks, as many drivers. Some risks they do not write would be dump trucks, although they started in selective states, but only if you've been 2 years in business. They will also write very, very limited car hauling. And again, like car haulers, that's one of the specialty categories which is available with all those insurance companies that I mentioned. Progressive, Berkshire, Great West, as well as Canal. They will write car haulers, but car hauling overall will be more expensive across the board. I would say around 15-20% more to what just a typical general freight carrier would be paying versus car hauling. So yeah, again, if this is the year where you're going to be shopping extensively, because I know the premiums overall have gone up. Every single state, I would say, approved and blessed those premium increases. So everybody's in the same boat, and it's nothing to do with your operation or your safety scores or your driver's MBRs or loss runs, just because the average claim per accident for a trucking accident has gone up substantially. I think I've seen some figures, $45,000, $47,000 per claim. I mean, trucking claim, where 5-6 years ago used to be in the 20s, 30s. So because cars are getting more expensive, post COVID, again, I think we're back into pre-pandemic traffic levels. The number of accidents gone up, and with inflation, the accident frequency and the payout per accident being higher, the insurance companies have no choice but to just keep increasing the prices. And if they're not allowed to increase the prices, then usually they just pull out from those states. We all know what happened in fires in California and Los Angeles. I mean, that's a different topic, but then again, I mean, the states regulating and capping those insurance providers were some of them just basically canceling and exiting the state. So in some cases, paying more for insurance is just, kind of one of those evils where you have to live with, because otherwise those insurance companies will not do the business in the state, or in some cases they will go bankrupt. It was already a couple of years ago, but there was an insurance company called Mojave Insurance. They were super competitive, super aggressive in 2020, 21. They were taking a ton of business from Progressive, Great West, Canal, and now they're no longer in business because they just went belly up. That's all I have for today. Until the next time, bye.